10, 9, 8, 7, 6, 5, 4, 3, 2, 1. You are all heroes. You have the power to unleash your full potential. The energy to assert yourself. The passion to fight for your dream.
What I do defines me.
The courage to start your adventure.
We have it in us to be the better man.
7 Ventures. We reach out to all heroes and offer them the perfect launch pad, because no hero can survive on his own.
Alone, we are now vulnerable. United, we are still invincible.
7 Ventures is the venture arm of ProSieben Sat.1 Group, one of the leading media companies in Europe. With the largest television network in Germany, we have the power to jumpstart your business.
Damn good television.
That's exactly what we're doing.
With its creative agency and its booming digital network, we create integrated growth campaigns.
And here we go.
7 Ventures is the leading media investor in Germany. We offer advertising time on all of our channels in return for revenue sharing or equity. We are ready. We bring your unique ideas to over 40 million TV households, to all relevant target groups. Let's join forces. 7 Ventures and young innovative entrepreneurs. You deliver incredible ideas. We have extraordinary power. We are all heroes. Welcome to the world of 7 Ventures.
And welcome to the second 7 Ventures Pitch Day here in London, ladies and gentlemen. Not only here in London, but also worldwide, in Germany, in Austria, in Switzerland, Europe. Because we are streaming this event live through MyVideo, our sister, our daughter company, on myvideo.de, but also on 7vpd.com, and on Deutsche Startups in Germany, which is our exclusive media partner. So what is 7 Ventures? 7 Ventures is actually the venture arm of ProSieben Sat.1 Group. And ProSieben Sat.1 Group is one of the biggest European media companies. It's the biggest media company in Germany with an unrivaled daily reach in Germany of more than 44 million users per day. And just to take that in comparison to another figure, our friends from Axel Springer, they have a newspaper called Bild-Zeitung, and they have a daily reach of 12 million. So our daily reach is 4 times more than the print. It's a quality newspaper in Germany. For those who don't know it, you have that as well in the UK, the quality newspaper, The Sun. Actually, it's the day of the pitches. We bring up here 7 startups on the stage, and now it's on me to pitch you 7 Ventures. And I thought I could do it live now, or I could show you a video. And since we're a TV company, I brought you a video from a pitch that I did 2 months ago, or 3 months ago. That was in Cologne. And there were 3 rules, actually. The first rule was you've got 4 minutes. The second rule was no suits are allowed. And the third rule was no PowerPoint. The problem was that I had a meeting at Deutsche Telekom and I came in suits. So first problem. Second problem was that I'm an investor and I stick to PowerPoint, so I can hold and grab on PowerPoint. That's the reason why I brought it with me again today. But what I did is, actually, I solved those 2 problems in combining something, and I made something like what I called the body pitch, and I'm going to show it now.
I have to get undressed now. And as you've seen from my colleague, we're all corporate guys, so we all stick to PowerPoint. And since there is also no PowerPoint allowed, I thought I'd try something different. And made something that I call body point. So my name is Thomas Offner, and I am an investment manager with 7 Ventures. Yeah. 7 Ventures, you know them all. 7 Ventures is actually the venture arm of ProSiebenSat.1. ProSiebenSat.1 is the biggest German media company, actually the leading media company in Europe, with all our channels. ProSiebenSat.1, which just started 6. We will start. We just started Sat.1 Gold. We will start actually ProSieben Max, which will be a male-focused channel. So, what are we doing? What are we doing actually with 7 Ventures? We actually do media for equity, media for revenue, and cash deals. What does it mean? So we invest our advertising time for equity, we invest our advertising time for revenue share and a minimum guarantee, and we do also cash deals. All right, this is our portfolio. We have up to 70 companies. They are more or less also revenue deals, media for revenue deals, but more and more strategic deals. Our last deals that we did is media, My Days and Billiger Mietwagen. Do I have something on the back? No. All right, thank you. Now we have to restart here. Click. Yeah, what does TV bring you, actually? TV brings you brand. We build up brands, and what we also do, we sell products. And that's very important for you. All these big companies out there, they build up their brands with TV. All those banks, those insurance companies, those automotive companies, and the FMCGs. But what does it bring you as a startup, as a small company? It also helps you with your online marketing. So SEO goes up, CPC prices go down, your click-through rates go up, and your conversion rate goes up. So just one example, the conversion rate. All of a sudden, people know your brand from TV. They know your brand from the TV advertising that you've done on our channels, and all of a sudden, they start to click on banners. So banner is not anymore branding, it's a cheap way to generate great traffic. It's easy. So brand is trust, is click, is money. Nope, it doesn't count.
You're kind of running out of time.
Yeah, no. So what are we doing? What are we doing?
I want to see the final product.
Okay, the final product. So what are we doing? We do investing, of course. We do hands-on management. We do coaching, and we provide you with our own personal network. Jens just mentioned it earlier. But that's what you will always hear when this VC stands up here. That's what everybody does. Some do it better, some don't. But what we also do is we deliver brand and we deliver reach. So you've got the reach that nobody has in Germany. 24 hours, million of people in Germany, 24 hours, 7 days a week. And we also do the 7 Ventures Pitch Day. It's a pitch day in London during the NOAH conference at the 14th of November. You can apply now. We give away 7 million in TV advertising for the first 3 of this pitch day. 7 will be allowed to get on the stage. Application just started. If you have a startup that is in Germany and wants to go there, apply now. Or if you have an international startup and don't want to get copied in Germany, but do it on your own, then apply for this. Well, that's basically it. That's the reason why we think that 7 Ventures is the better VC. And ladies and gentlemen, this is the naked truth.
Thank you very much. Yeah, ladies and gentlemen, this is the naked truth. 7 Ventures is the better VC because we bring you the investment, but we also bring you reach. And where are we doing it? We have actually 2 parts where we're investing. We call it digital commerce and we call it lifestyle commerce. So lifestyle commerce is the classical e-commerce that you all know, with physical goods, of course, also with warehouse and stock risk, but also digital commerce where we invest into marketplaces, in travel, but also in education. We also have an own ecosystem that we can provide our startups, our portfolio companies. We've got an online marketing agency called Booming. They're experts in SEO and SEA, and they also have actually provided the sponsoring for our audience prize that I will come to later on. Then we have 2 creative agencies, actually, Sugar Ray and Creative Solutions. Sugar Ray has, perhaps you've seen all these superhero quotes all day, yesterday and today. They've produced that animatics, for example. And Creative Solution was responsible for the trailer that you have seen in the beginning. summing it up actually, TV enhances your KPIs. TV creates brands, but also TV creates markets. And all the viewers in front of TV, they can convert into your customers, which at the end of the day will increase your sales. We're always talking about the Facebooks and the Googles and the YouTubes in the world, and everybody's talking about the million and million of users on Facebook and Google. But if you compare that to TV, for example, in that case, we have twice the number of page views, of viewers usage per day compared to Facebook. And we have 6 times more usage per month than Google has. So this is a big asset. That means TV is still the lead medium in reach and usage. And TV, that could be your asset if we are going to invest our advertising time in your startup. One success case that I brought with me today was Tirendo. Tirendo is an online retail company for tires. So nobody was aware before Tirendo that there's a possibility to buy tires online. And we created a whole new market, an online market for tires. We invested in the company and our TV advertising. We built up the brand, they sold products, and within 2 years, they had double-digit million revenues. So customer base went up, revenues went up, and at the end of the day, we were able to sell the company through a 50 million trade sale just recently. It's the same, for example, with Zalando. Of course, you were able to buy shoes online before Zalando, but nobody did it. And as we started to invest into Zalando and the TV advertising on that, they skyrocketed with customer base and revenues. And then there is another success story that we have. It's Buzu. Buzu is a social language learning platform, and we kind of invested 4 million euros TV advertising in that company. But before I go into details, I would ask Bernhard Niesner, who is the CEO, the founder and CEO of Buzu, on the stage, and he should tell you what has happened during the last 12 months with those 4 million that he won in a very great way last year at this very place. Bernhard, please.
Okay, thanks a lot. It's a pleasure to be here back on stage. To be honest, I'm a little bit jealous because I would like to sit over there and being able to participate again in the competition, but they didn't let me. So anyway, what happened with 4 million euros? So yes, we did have a great year. It was a fantastic opportunity for us to test out TV as an acquisition channel. So for those who don't know Buzu, so we are the world's largest social network for language learning. We provide individual courses with 12 different languages and combine the language learning process with direct interaction with native speakers. So you can directly practice your language skills with other native speakers of our community. So we have grown already our company to 35 million users around the world, and we're currently growing at around 40,000 people every day. So to picture that, basically in 2 days, we're able to fulfill a complete Olympic stadium with our users. So we're a very international company. Our biggest market is Brazil, Russia, but also Germany is an important market. It's the 4th biggest market for us, and therefore it was a fantastic opportunity to have this money and grow our position in the German market even more. So that was me last year, lucky winner, great time, big celebration afterwards. We also won the public votes because we sent a few newsletters to the landing page and got some votes from our users. So we had great workshops with PR, about SEM. We did a branding workshop in order to decide in which direction the TV spot is going to go. And we also had a fantastic UX workshop with Relevantive where they filmed our users and we realized how difficult it still is to sign up to our website. So we did a lot of optimization before we actually then started with the flight. So in this branding workshop, which we did with Enable to Grow, we decided to first make a branding spot and then slowly move into performance. We have quite some experience with performance marketing. We always did a lot of PPC, obviously never TV. So we said, okay, let's give it a try with brands and then do a performance spot. So let's have a look at our first spot.
Buzu.com, a language learning community.
Yeah, so that was our first spot. We said, okay, let's go for it. Let's go to Tenerife. It was very cold in London at that time. Let's film it there. CEO obviously has to come to the shooting. It was a fantastic weekend. It was great. But looking at it, we felt, we could add a little bit more spice to that, right? And when we looked at the results, we were obviously excited about to see what happens in terms of users. Yeah, we tripled the number of visits, even when the flight was over. We had a so-called depot effect of, still continuous growth and visits because people remember the spot. But we felt, with TV we can actually do much better. So we optimized a lot as we come from performance, and performance is all about optimization. So we said, okay, let's do a performance spot now as planned, and let's test the spots beforehand, because the first one was more like based on the creative agency and our idea. But the second spot we tested in a focus group. We also tested the slogan of the spot in display campaigns. So we had several slogans to try out. And the one with the highest click-through rate, we actually used then as a key slogan for our spot. And we integrated in a 360-degree campaign. So we used our Facebook page, we did email campaigns, SEM obviously was completely aligned, retargeting, display, etc. And as always, it's all about optimization. So we had a much better tracking in place, so like a 15 minutes window where, we do a pixel tracking, could attribute the number of visits much better. And in TV, it's all about, when do you exactly show the spot? Is it 11 in the morning or is it 5 in the afternoon? What kind of format is around? Which channel do you use? So it's a lot about optimization. And then we came out with this spot.
Auf Buzu.com habe ich in einem Jahr 2 Sprachen gelernt, zum Beispiel Japanisch. Genki?
私は元気です。
Oder Spanisch. ¿De dónde eres?
De Sevilla.
Lerne jetzt deine Lieblingssprache mit 30 Millionen Muttersprachlern. Auch mit dem Tablet oder Smartphone. Buzu.com. Zusammen Online-Sprachen lernen.
Yeah, obviously a complete different spot. It's a bit more going into German humor, it's famous. And it's a different idea behind the spots. And so we said, okay, it's all about signing up. It's showing the App Store and the Google Play logo there. So immediately we had much more traction on our mobile apps. And the results are pretty obvious. So in the first one, actually, we increased the number of conversions by 10%. But then in the second flight, like for like, and obviously we did then several months of TV advertisement, we more than doubled the volume. We had already quite some substantial volume in Germany, but we still were able to double it. It had also a big impact on SEM, which was mentioned beforehand. So Germany was a very competitive market for us, so the CPCs on SEM increased already by 1/3, but we were able to reduce our cost per leads by 10%. And even if the total market actually were looking for less for language courses, -3%, we were able to increase our conversions by 1/3. Brands, it's all about brand building. It's a long-term marketing activity, so we were able to more than double our brand awareness, which was great. So the key learnings for us for doing TV advertisement is be clear about the objective and test the spots beforehand. Do focus groups, make sure that it works for your target group. It's all about integration into your other marketing activities. Don't do it as a standalone activity, but rather integrate it in everything you do. And finally, just optimize it continuously. So we had a great year, and we are now considering investing more into TV. So it's definitely a channel which works. And yeah, I hope we're going to have a great competition, and let the games begin. Thanks.
So thank you very much. What is the 7 Ventures Pitch Day all about, actually? If you stick to the number 7, you're all fine. We are going to invest 7 million euro in TV advertising in 3 of the winners. So the first gets 4 million, the second gets 2 million, and the third gets 1 million TV advertising for free, nothing in return, no frills attached. And we've got 7 startups on stage, and I can say now, you're sitting here in the front rows, and I can say now they're all winners already, because we've got applications from over 300 applicants. We've got it from all over the world, from South America to Japan. And after a 3-tier process, we finally came up with those 7 startups. And here are the startups. We've got Azimo, a UK-based company in the social money transfer company. Then we've got Checkrobin from Austria. I would say it's an Airbnb-like company for transport and logistics. With Eyeglass24, who got a wildcard directly out of our ProSiemens Alliance Accelerator that we started early this year. They do reglassing of glasses. With GetYourGuide, which is a marketplace for travel-related activities. With Mygola from India, where you can very easily, in a very sleek way, put your itinerary together for your next journey. We've got Outfittery, a curated menswear fashion company online. And we've got Tado, who invented and produce a smart heating app for smart homes. And we've got 7 jury members, and here they are. And I would like to briefly introduce you to them. We've got Philipp Freisse from KKR. Thank you that you're here. He is a partner with KKR and responsible for media and digital in Europe. And actually, I told that story last year already, but I would like to repeat it. He was actually, I would say, he's the godfather of incubation. In the late 90s, when nobody was knowing what an incubator is, he did Venture Park, and that was actually the first incubator, I think even in Europe, wasn't it? Brand Hoberman. Brand, thanks for joining on short notice. Thank you very much. Brand, also one of the investors in Buzu, so I think it was a good thing that we invested 4 million before that. Philippe Botteri, thank you for being here. Last year we had Sonali. Now we have you on the stage, so thank you for coming. I think the next thing that we have to do is a deal together. Fabrice Grinda. Fabrice, thank you that you're here. You are also supporting. Fabrice will take over the moderation then for the startup pitches. Rainer Merkle from Holzbrink in Munich, a venture capital company from Munich that we are very closely working together. We've done a couple of deals together. Thank you that you're here. And Christoph Mayer, thank you that you're here. A very well-known entrepreneur from Germany, not only very well-known, but also very successful. Thank you that you're here. I think that's worth an applause, ladies and gentlemen. So 2 things that perhaps could come up in that case. 1, 2, 3 investors are invested in those companies, and I think they will be very biased. For example, Rainer is invested in Outfittery, and we decided that he is not going to vote for that. Those jury members that invested in a company are not allowed to vote for those companies. And another mistake, perhaps these are only 6. So who is the 7th member of the jury? And the 7th member is you. We started actually the online voting 3 months ago, and the online voting is still open until the end of the last pitch. So you can still vote for your favorite company on 7vpd.com or on our Facebook app, and the voting is still open. And the winner is, first of all, it's the 7th vote and the jury vote, and secondly, it's also the audience prize. So the company with the most votes gets the audience prize that we'll be talking about later on. Thank you very much. Fabrice, I would say let's start the competition, and I'll hand over to you.
I mean, we're basically going to get things rolling really rapidly. Each time we're going to have a video presenting each company, and then the company is going to present itself for 3 minutes, and then we'll have a quick Q&A, and then we'll vote. So let's get their show on the road with Azimo.
Okay, we're going to show a video first.
She's dependent on this money I'm sending her to do her living.
Without this money, she won't fulfill her dream to become a lawyer.
It's too much important because I save money for my future. I think about my future.
My sister-in-law, she lost her husband and she's got 2 children, so she really needs it.
Azimo is changing money transfers forever.
It's a huge deal because over a year I would almost save up £250.
For me to earn this money, it takes a long and there is an effort. It's working out so much better.
We we don't have much money as well. So Azimo is perfect for me.
Okay. Thank you very much. My name is Michael Kent. I'm the founder and CEO of Azimo. I'm going to keep my clothes on, which you'll be happy to know. But I do have to tell you, and apologies to our American friends, that we've got a problem, and this is it. The Americans are stealing from you. I think you've probably noticed this in the last couple of months. We're not happy about it. She's not happy about it either. In this particular case, the people we're worried about are these guys here, Western Union, the original fat cats. And I'll tell you why this is a problem. In Germany, the average cost of a migrant remittance, that's a sub-$1,000 transaction sent by a migrant outside of Germany, generally to the developing world, is 10%. Not 10 basis points, not 1%, 10%. And that should make you sick. It's a $500 billion flow, the remittance flow annually. So this is a huge market. $1 trillion move from the developed to the developing world in personal remittances. This is a big thing. In Germany, it's huge as well. One of the largest markets in the world, $16 billion a year of flow from the developed to the developing world, from Germany to the developing world. And it affects a huge number of people. 11 million people, migrants in Germany, 13% of the population. So we're going to fix it. We are the reimagination of money transfer. That was the old way, the Western Union model. We're social, we're online, and we're very, very fast. This is an example of the site. We send to 190 countries in all parts of the world. We send to cash collection, we send to physical cash delivery, and we also send to bank accounts. We cut out the value chain. You can see we go direct to the sender. Lots of hungry mouths in that Western Union value chain. Our prices are generally 75 to 85% lower than a Western Union transaction. This is the team. We won't be in the TV ads, don't worry. Myself, I started a business in this space, actually grew it up to $4.5 billion of flow. It's Europe's largest independent offline money transfer company. I had a digital epiphany a couple of years ago and started Azimo. We've got some other great guys on the marketing and tech side. This is a very important thing to know. This is a fantastic business if you get it right. The people, you get it right and they keep coming back. They keep coming back. And this is our cohort analysis. You acquire a customer, they keep coming back. They're sending every month. Why should you vote for us? Well, this business has the potential to change the world. This is Bill Gates at the last G8. He said if you could cut the cost from 10% where they are globally to 5%, you'd release $16 billion in the developing world. If everyone in Germany used Azimo at our 2.4% price, you'd unlock $1 billion a year. So vote for Azimo. Help make this guy a thing of the past. You can make it happen. Thanks very much.
So, I mean, a lot of people have tried to crack this nut, and you've seen companies like Zoom and many others, and they've ended up facing a lot of issues, either regulatory, like the Patriot Act, or scaling in terms of like actually getting the word out there and making sure people on both sides will start. I mean, what's your customer acquisition strategy? And
so
what type of volumes are you
doing? My cost for acquisition is at about £25 per acquisition. The unit economics are you make about £12 per transaction. Average transaction value is about £400. Our take rate is incredibly high because we've actually got great deals with the partners on the far end. We make about £8 of revenue per transaction. Net revenue per transaction.
Net revenue.
Yeah, it's great. If you
but then you need 4 transactions to break even, so how much recurrency do you get?
The average European remitter sends 10 times a year. So if you think about these are not people that, like you guys, you're maybe sending it to pay for the villa or whatever, I don't know. But no, you're sending, these guys are in an economy where they don't have spare money, but a sizable, about a third of their of their monthly salary will go home to mum, dad, kids, education, food, healthcare, that stuff. And just to say, Zoom, I don't think of Zoom as a bad example. That business has popped 100% since the IPO. It's now valued at $1.2 billion, and those guys are busy disrupting the US market. The European market is twice the size, and that's what we're going after. Sorry. Go. Hi, Brent.
Hi, how are you?
Yeah,
How are you building up trust? I mean, because that's one of the big issues, right?
Yeah, so a lot of about 25% of our customers come through social. We have a bunch of tools that allow people, once they've sent money, to share that experience online, so either via Twitter or Facebook, and we reward them for doing that. So if they tell their friends and their friends transact, they get free transfers. And actually, this is one of those classic markets, which is a word-of-mouth market anyway. You know, you arrive from Poland or wherever, you arrive in the country, you talk to your friends, you stay with relatives, and you talk about what's the best way to send money home. We've kind of used digital tools to enhance that, but it's a word-of-mouth business. So yeah, initial traction, hard to get, and that's why, you know, this would be a great play for us.
What's the current volume, you said?
Sorry?
What's the current volume of remittances per month?
On our platform,
yes.
We're doing about 3 to 4 million a month. Okay. And if you think of the average transaction size, it's about £400. So that kind of gives you lots of information there.
Sure.
How dependent are you of existing bank systems?
Sorry?
How dependent are you of existing bank systems? Do you need to have banks in the receiving countries?
So not in the sending countries, people get money into the, so the question was, how does the money come in and out? On the send side, we use debit cards, Sofort, direct bank transfer for the German market. And then on the payout side, no, you don't. A lot of our customers aren't banked. So we have 150,000 cash payout locations, particularly in places like Africa, the Philippines, Vietnam, parts of Latin America.
So you have your own cash
Sorry?
payout? You have your own cash payout
We have
location?
relationships. Generally, they're with banks or pseudo-bank financial institutions in the developing world. So we've signed deals with those guys which allow them to pay out cash for us.
And how much margin do they take?
Sorry?
How much margin do they take?
I mean, it's up for negotiation. So my previous incarnation, I was going around the world beating these guys up and negotiating with them. But on average, it's about between 20 and 25% the take. But you can generally get that down with volume.
Okay, thank you.
Thank you very much, guys.
So now we're going to do Checkrobin.
Lisa is flying from Vienna this evening, but she's forgotten her passport in Klagenfurt. So what to do? Off to Checkrobin.com. Here, she quickly finds Peter, who entered his planned trip from Klagenfurt to Vienna by smartphone the night before. They agree upon pickup and delivery times, and off they go. Peter makes a quick side trip to Lisa's mother and picks up the passport. He then makes his way to Vienna. Thanks to geo-tracking, Lisa can follow her consignment, and Peter can adjust his arrival time in the event of an unplanned delay. Lisa receives a text message 30 minutes before arrival, and, after only a few hours, holds her passport in her hands again. And not only driver and sender profit, but the environment does as well. Urgent parcel shipment has never been so easy, fast, and flexible. Take advantage of an Austrian-wide network where everyone profits, not only Lisa and Peter. Checkrobin.com.
Hello, thank you very much for being here. My name is Hannes Jagerhofer, and I really love it to be on the stage. Actually, Checkrobin is not my first startup. Years ago, we founded checkfelix.com, which was a travel engine-based travel search engine for travels, actually, and we sold it to Kayak finally and to the market leader. And then my team and myself and my partners, Niki Lauda and Attila Dogodan, we founded Checkrobin.com. Niki Lauda, I guess everybody knows him. He's a Formula 1 legend, and Attila Dogodan is the CEO of the Donco Catering Company. The video just showed you, hopefully, what Checkrobin is really doing to enable an easy, fast, and unpacked transport of urgent items based on an intelligent and real-time engine. But I think our power goes fast, much more beyond. I think we really can say that we can revolutionize the whole transport system. Why? There's one word, is everywhere saying same-day delivery. So let's cite one of the, actually, of these CEOs of a big company, Mr. Rolf Weisbeck, who is saying the question is not whether same-day delivery will become a reality, but when it will be and who the key players will be. The same is for Amazon. Amazon is now trying to use their employees to transport stuff on the way home to the clients. But I think this is bound to fail because of this absolutely limited range. Why do you think we have the solution? Let's have a look on the German market. So we have between Munich and Stuttgart and Frankfurt and Düsseldorf, we have every day 170,000 cars on the street for different reasons. And the thing is, we only have 1.5 persons in the car. So there's a huge empty space of 100 million cubic meter per year. And we have 6.2 million potential Robins because they are commuting every day more than 30 kilometers onwards. And they're really struggling because of the high prices of the fuel. But what is the benefit of a Robin, of the driver? It's up to 29 euros per item, including a 10% fee for Checkrobin. And but who is actually, let's say, the market potential, the next step. Yeah? The market potential, because everything is the other side around here, is 10.3 billion euros in the express market in Germany, which is a huge, huge potential. And let's go jump over to eBay, 200 million listed items just by private sellers in Germany. And each item has to become to the buyer, and I think we have the answer. Why we have the answer? Because I think that let's see if we look back the next show, what happened so far, because everybody wants to have it today. Today, like same-day delivery. What happened so far? Within the 4 months, we have with zero marketing, we delivered the proof of concept in Austria. This means that from the plastic surgeon on the elderly lady, everybody was taken care and being our service. We transported from airline spare parts, we transported eyeglasses, and even, let's say, a luster, which has to come to the buyer, and actually this within, yeah, this is actually the funny thing, we transported from an elderly lady, here, third teeth.
We need to move on to that Q&A section. So who are the people asking or hiring the Robins? Do you think it's consumers only, or do you think they'll also service companies that want to do same-day delivery?
I think now we have the requests of really business-to-consumer companies. So I think there is from the consumer-to-consumer side is like it was in the intro. If you lose something, you forget your keys somewhere in the hotel, and then you have to bring it directly in a very fast way to yourself. And the other thing, I think, everybody who has deal with delivering e-commerce, the whole e-commerce business, is really a huge, huge potential for us.
But who today are the people ordering this? Is it B2C or is it C2C?
Today it's mostly C2C, but getting more B2C.
And how many transactions per month right now?
We had about 4,403 deliveries within the last 4 months.
Okay, and it's it's a flat fee, 30 euros? Or?
It's about 10%. It's a flat fee, actually 3.9 euros, something like this, is what we earn per each delivery.
Okay.
And how do you think about the safety issues? Because the issue with transporting goods is you don't know what you're transporting. I mean, in most cases, delivering a box, you don't know what's in it. This is very dangerous, depending on what's in the box, right? So if you get stopped by a policeman in your car and he checks what's in the box, and you may have a very bad surprise.
This issue everybody has, even the post or the DHL, whatever, yeah? So, but what we figured out within these 4 months, we had 0 losses, we had 0 damages, we had 0 insurance issues. So let's say the self-confidence of each of our drivers, of our person on the street was amazing. You know, we had not even one problem within these 4 months.
But that's going to happen. So you need to prevent it, because as soon as you gain scale, all the dealers in your country or whatever country you're at, will use that, and they will try it. And the question is, once that happens, it's too late. So what are you putting in place to prevent this from happening? Because this is really a real threat for the business.
And this was what we were thinking from the first day on, but I think the same problem has every driver of the Post or every driver of DHL, whatever he has in his backyard. He cannot be sure that it's a safe transport.
But I guess, our view on such models is it's probably not going to remain a crowd thing, but you will have semi-professional guys delivering this, and they are kind of professional Robins going through, so you can handle those issues. On the downside, then it's going more towards a model like Shuttle, where you have a professional crowd, and you're basically doing a yield management for them. Is that your vision of the business, or do you believe that this is going to be a crowd delivery system?
I think it's a crowd delivery, because what is the reason? You earn less than you spend. So whenever you go from A to B, you earn less money than you really will spend just for fuel, just for whatever of your car. We have something like per kilometer 0.4 cents is the official amount. And our goal is always earn less than you spend. And so it's even a question for a reason of the legal stuff, And we don't want people make money with Checkrobin. we just want to give them money and just to lower their expenses they have.
In many companies, there are already existing bike messenger services, various messenger services. What's the price difference? I mean, you guys are at 30 euros, I guess, for delivery. If I want to use you as opposed to one of the traditional companies that might have insurance, et cetera, et cetera.
The difference is that these 29 euros, they just you then pay 29 euros if you want to have a pickup service and a drop-off service. If you say just I go from A to B, it's cheaper, yeah? Okay. And I think, but we go long distance, yeah? So we go like 300 kilometers, 400, 500 kilometers. Nobody is offering a long distance service. We are the first ones who really offering long distance. And this is what we really figured out the last month, yeah, that the people really have big needs in long distance transport, because you have these organizations like Tiramisu, you have all this stuff where the local organized delivery, but we really focus on long distance.
So are you competing with a company called UShip?
If we are competing, I think we are thinking about who is our competition. Actually, there's only one company we know which is in Scandinavia, but they deal with marketplaces. It means you put in something, you have to send somewhere, and then you're waiting if somebody is figuring out that could be for him something interesting to deliver. But we do it on time, real time, with a very sophisticated technique. Yeah. So I think this is the real difference of Checkrobin.
Okay. Thank you. So moving on to Eyeglass 24.
15,000 glasses get reglazed in Germany every day for various reasons.
My little boy. Last year we had to change his lenses several times. And only once because his eyesight changed.
Ah, the 70s and the 80s. My old glasses, I kept them all, only with new lenses. Fashion is always coming back.
I buy everything online. Shoes, books, even glasses. But this time, I really want to keep my frames.
Eyeglass 24. Reglazing, now online. Enter your prescription, choose your lenses, and your frames get picked up at your house and reglazed in only a few days. As fast as high street opticians, the highest quality, and up to 80% cheaper. Eyeglass24.de.
So, as you've just seen in the video, there are many reasons for reglazing your glasses, like, for example, scratched lenses or the change of your eyesight. And since there are so many reasons, there are also lots of customers. Now imagine there was a company that serves all of these customers in a new way, offering them big time advantages. And imagine that this very company, even though it's shipping physical products, has a return rate of close to 0%. Sounds like a dream? Well, then Eyeglass 24 is a dream come true. My name is Jascha, I'm the CEO, founder of Eyeglass 24, and it's my pleasure to now quickly take you through our business model. Let's look at the market first. On the left-hand side, those are the sales of glasses, meaning for customers who buy new frames and new lenses at the same time. This is also the market where some of the online opticians that you may have heard of are operating in. But then on the right-hand side, you have the reglazing market, and this is our market. It's a market worth 1.2 billion euros per year in Germany alone, not mentioning the rest of Europe. And we are disrupting that market by two things: by a much cheaper price and a superior service. Let's look at the price. Right now, customers, they spend on average 200 euros for a new pair of lenses at the high street opticians. With us, they save 60%. And what is very important, they pay less, but they do get the same high quality. We source our lenses exclusively from branded manufacturers from Germany and Switzerland. So much for the price. Now the service. Here we have two advantages. First one is convenience. Our customers, they select the lenses online, and then they get their frames picked up from the house, so they don't even have to leave house anymore. And the second thing is speed. We reglaze most of the frames within 24 hours, and this is much faster than the high strip opticians. So, to sum up from a customer perspective, they get the same quality, it's much cheaper, it's more convenient, and it's faster. So it's no wonder that customers just love us. We've now shipped over 3,000 lenses, and the feedback that we get is just phenomenal. And this, of course, also leads to low returns. I mean, we all know how much a pain the returns are for so many e-commerce companies out there. Our return rate is below 2%, so we don't have that problem. As for the team, we're a group of guys with a background in strategy consulting. We have online experts, we have IT developers, and we have successful entrepreneurs. So to sum everything up, yes, we are first mover in a huge market, and yes, we offer significant customer advantages, and yes, we operate at a business model which is very lean and has virtually no returns. In other words, this is a working business model, it's a proven business model, we have the right team, and now we're ready to grow. Thank you.
How do you protect from the online glass merchants to simply add this as an additional product line? Because they already have gone through the customer acquisition costs, etc., and you're trying to unbundle that e-commerce experience. How do you protect from that?
Well, I mean, I'm just going to name it, like in Germany you have Mr. Specs, Brille 24, for example. Actually, we're not afraid of them entering the market because they will never be able to so precisely target the reglazing market as we are. I'm just going to give you one example and from another industry, which is car glass. Yeah? Actually, they do like they repair the front shield if it's broken or scratched from your car. And you can get to every workshop, to every garage to get that fixed. But car glass is the only one that's really like focusing on this very part of the market in their communication. And such, if your like front shield is scratched, the first thing that comes up is car glass. And we will do be the same thing for the optics industry. So they do reglazing of cars, and we do reglazing of glasses.
Can you walk us through the unit economics? So what's your customer acquisition cost versus the average ticket times gross margin, and then to get a sense of how that looks like?
Well, at the moment, our contribution margin after the variable costs is about 1.5 more or less of the customer acquisition costs.
And you're at what monthly revenues?
Monthly revenues?
Mm-hmm.
Right now it's about 20,000 euros.
And the gross margin per order, just so I get to make sure, you're at what, 60 euros average basket size?
Not quite, but we're getting there.
Okay. And your gross margin is what, 60%?
Per
order. What's the gross margin?
The gross margin is around 55 euros, more or less.
The average order size is one price. Your product cost is something, and the net of that, you have your gross margin.
Yeah, so the average order is 80 euros.
Okay.
The gross profit is 55, and it's about like 1.5 times the acquisition cost.
And you don't have any inventory. I mean, you have a factory that you don't control, that's third party that operates it for you. We
don't have any inventory, no. And that's why it's such a lean business model. No inventory, no returns, so it's very straightforward. Okay. And that's why it can be so profitable and easily scalable.
How can you get the delivery in? I mean, according to your the TV ad, it was just a few days. If you don't hold any inventory, how do you manage to get the lenses manufactured? I mean, usually this is done in Asia if you want to have the cheapest cost. So how do you make that work?
It's like when the customer buys the lenses online. In most of the cases, like 80% of the cases, we can already order the lenses from the supplier. And then they're delivered overnight express to us. So that means that in most of the cases, we have the lenses before we get the frames from the customers. So it's kind of as we had inventory, because when the frame arrives at our house, we already have the lenses, we just have to put them in, but we don't need to keep the stock.
Your customer acquisition strategy is SEM or?
Well, right now it's basically it's online marketing, like SEM and everything, and it's what we call like intelligent offline marketing. So we're searching for partners, for corporations, and we already found a lot of them, for example, for like big corporations, the employees network. We're talking to health insurers, so all of the players that also gain through our product. And then in the future, of course, we will also build a brand through mass media.
And how often do these transactions recur? Do people do that often, the reglazing? They do it just once every years?
Now, the surprising thing is that for us, in the 4th month after launch, we already had 15 returning customers. And just to explain why, in Germany, all people who wear glasses, they have on average 1.8 pair of glasses with the current prescription. And they have many more, of course, that don't have the current prescription anymore. And then they also need, for example, sunglasses with a prescription. So they have multiple reasons to buy.
Operating subscale, I'm intrigued that you can get still such high margins and still give the customer such a good deal. Are there no real scale benefits in this market?
I didn't quite.
Well, your scale, you're still buying in very small quantities, whereas you have competitors, the bigger guys are going to be buying in huge quantities, right?
Yeah.
So they're not able to buy that much more effectively than you, or would your gross margins get much better when you get bigger?
Well, for the product, for the lenses that we buy, doesn't make such a big difference. No, it's actually a pretty small part of our P&L, so to speak.
And in France, as I understand it, some of the players there have had an issue buying lenses due to sort of French monopoly, monopolistic behavior. You haven't found that?
No, we haven't found it at all. Actually, we were contacted by quite a few lens producers already who wanted to work with us. Right now, we're working with 2 of them, one from Switzerland, one from Germany, just to stay independent. But we haven't found that problem yet, no.
Great. Thank you.
All right, thank you.
Get your guide.
Jetzt darfst du nicht voten, gleich.
Ladies and gentlemen, first of all, thank you very much for the nomination. I'm humbled to stand here today and present Get Your Guide to you. Get Your Guide is the largest online booking platform to book things to do, activities, attractions, and tours in the world. So let me explain to you what that is. Every day, hundreds of thousands of travelers are coming into London, and they all book flights, hotels, and rental cars. And most of them do that online these days. However, once they got to a destination, and it actually gets to the fun part of the trip, they very often are lost and don't know what to do, and just end up going to regular attractions or buying tickets at the hotel concierge desks, or stand up queuing for hours in line. Get Your Guide is actually solving that problem by aggregating all the different things that you can do once you get to a destination on one online platform and making it bookable and allowing consumers to review and recommend these different things to do. And we've been going and growing now for 3 years and have more than 25,000 things on our platform, such as water parks in Yucatan, for instance, or Venice gondola rides, or a San Francisco Segway tour. Or think about this Barcelona bike tour. I actually did that with my girlfriend just a few weeks ago. It's fantastic. Or if you're so adventurous, even a bungee jump in San Jose. So we have thousands and thousands of activities that we contract directly in all these destinations. And how the business model works is that suppliers use our extranet to upload activities onto our platform. They manage their pricing, they manage their availability, and we then sell it off to consumers direct or through our partner network and take a 20 to 25% commission in between. And it turns out that travelers actually spend a lot of money in destination. In Germany alone, it's a $12 billion market, and in Europe, Europeans spend more than $50 billion annually on booking tours and activities in the destination. So things like the Tower Bridge or things like the activities that you just saw in the video. And it's our mission to aggregate and make all these activities bookable anywhere you go. On a last note, we are currently in the activities industry at an inflection point in time where travelers take their mobile devices to the destination. And our mobile growth has skyrocketed in the past month. We went to more than 20% mobile transactions in just 12 months. And that's why we believe we're actually very well suited to win this prize today. We're very mobile. We have more than hundreds of thousands of German customers. And we have the right team with TV experts. We just recruited the Chief Commercial Officer of Just Eat from the UK, who did a very successful UK TV campaign. And we want to go now to the next level and go from our performance-driven marketing that turns around millions and millions of dollars in Germany every year to start and build a brand and do TV.
Spot on. Great. Spot on the time. Actually, I wonder, I mean, you don't know at which point in time the consumer actually books the service, no? At one time you book a flight, then you book a hotel, then you arrive at a place, so you don't know which device, at which point in time. So what's the secret sauce in marketing to address this rather fragmented landscape?
Thank you, Rainer. That's actually a very, very good question. So the question here is about timing. And yes, it's true that particularly in the beginning when we started the business, that was one of the key questions. So when do people actually book? It's a very seasonal product. But by now we have actually implemented a lot of data models, and we know exactly when Germans are traveling, for instance. So Germans are traveling around the Easter break, are traveling exactly around the Pentecost holidays. We know exactly when the city break weekends actually happen. And the big peak seasons are actually just, I would say 7 to 8 weekends a year, and then the weekend, sort of like the weeks around it. So in terms of, and I think that's where the question is going, in terms of actually targeting TV, I think we have a very clear clue when we have to advertise. And we also obviously have a very clear cue because of our quite substantial business already, what our consumer demographic looks like. So we would also know exactly in what sort of shows we have a 40 to 60-year-old family demographic. So I think we have a pretty clear view on when we have to target them.
What's the difference? I'm sorry.
Are you saying that by this you can outbid or make more efficient advertising than and rise above the noise in the travel sector? Because everybody is paying pretty high CACs in the sector.
That's true. Actually, it's not totally true for our space because we're not in the hotels and flight market, which is the very competitive market. So the tours and attractions market is actually, particularly in Germany, not as competitive. But you're right, we absolutely think that building a trusted consumer brand in such a fragmented marketplace is extremely important to finally rise above the noise and not only have a pure SEM model, but also a trusted consumer brand that they come back to every single year when they travel.
What's the difference with viable or viable?
Viable? Yeah, that's a good question. So viable is a peer-to-peer model. So that's actually individuals uploading activities. GetYourGuide actually started as a peer-to-peer model in 2008. It didn't work. We tanked, and in 2010 we started with the current model. And it's actually quite interesting. The peer-to-peer market is very different to the professional market. So the professional market, the Madame Tussauds of the world, the river cruises, that's all about travel. It's all about mainstream family travel, 40 to 60-year-old people. Viable, the younger peer-to-peer model is much more, I would say, let me be so mean here on stage, sorry. 25-year-old hipsters doing coffee breaks, basically, but that's a very different market.
Okay, but if you're doing the short tail, most people are going to have the top 10 things. They go to Paris, they're going to go to the Louvre, and they're going to go to the Eiffel Tower. And for that, they don't really need you. So arguably, it makes more sense for the second tier of activities, and yet if the entire first tier of activities is X% of the business, I don't know how much the short tail is, then you're not really covering that because they don't need you for that.
So Fabrice, I would actually argue your first point that they don't need us for the big attractions because they can, for instance, the Vatican Museum's huge attraction, or more than 10 million visitors every year. It's our best-selling attractions because people can skip the queue when they go to the Vatican, and we pre-sell Vatican tours right away. But to your point, there's actually a gigantic mid-tail of activities that is professional. You don't need peer-to-peer for that. We have hundreds of thousands of professional Segway tour and bike rentals and river cruises and I would say $3 to $5 million companies, professionally run companies that are out there and that are starving for distribution. And we want to send the people that are currently booking the Eiffel Tower, not only to the Eiffel Tower, but also to this fragmented merchant base.
What's the current traction, and also what's the current customer acquisition strategy?
What do you mean with traction? Can you define that?
Revenue.
Okay,
gross
so in
and or
revenues,
net.
we're on a $50 million run rate in revenues, gross, and we make a 25% cut of that.
And your customer acquisition strategy?
And we've grown by more than 150% year over year in the past 2 to 3 years.
Can you talk about the economics by customers?
Yeah.
So if I'm the attraction, what kind of cut do I give you?
Pardon me?
So talk about the economics from the perspective of the attraction sites, etc., who are uploading your site, who are using you to get to the ultimate visitors. What kind of cut are you taking?
It's, as I said, a 25% average commission cut from the attraction, but the attraction owners on average, and that's the nice thing, or the activities and the tours, we're on average a higher margin business than the hotels and definitely than the flights. Because in order for us to bring to the Shard, for instance, which is on the other side of the river, in order to bring another 1,000 people a day is actually much more easy to handle than for a hotel that actually books out.
And you provide the ticketing solution, so if I jump the queue to get to this attraction, you have it all.
Exactly, and this attraction will have to use our reservation and inventory management system.
Okay.
And if they want to attract more customers, because it's a very seasonal business, again, they can actually discount their products to rise higher in our search ranking and then even get more consumers.
And what's the average booking?
Average booking it depends on the source market, but the average booking globally is around 140 to 150 US dollars per transaction.
Okay, but then you're making whatever, 30, 40 bucks per transaction.
That's right.
In travel, historically, the CPCs have been, I don't know, $1. And if you're at a $1 conversion rate, that's like whatever, $100 customer acquisition cost, you need 2.5.
Again,
purchases.
Fabrice, so we are not in the hotels and flight space. So our CPCs are significantly lower. The average CPC for our product in Germany is around 35 cents. And so like in the UK, it's a little bit higher, about 50 to 60 cents. So our market is not as competitive
And
yet.
visit to booking rate?
The visit to booking rate, that again sort of like, depends on the source market, but without going, I hope my marketing chief doesn't kill me now when I disclose all that stuff on stage, but we have very healthy conversion rates, depending on the source markets, I would say between 1% and 4%.
Okay.
How big do you think this is going to become?
We're extremely bullish on this being actually one of the Berlin billion-dollar companies.
Thank you.
Thank you very much.
Can't touch it.
Mygola.
Hi, everyone. Thanks for being here. My name is Anshuman Bapna. I'm the CEO and co-founder of Mygola.com, where we're trying to build the world's best travel planning experience. And I'm here today to convince you of 3 things. One, that itineraries, day-by-day plans, are actually the key to solving travel planning. Second, that we have cracked it. And third, that you should send this as the winner for this particular contest so that we can go out and bring this technology to Europe. So let me start with the first one. So this ugly-looking slide is unfortunately the thing that most travel startups face, which is the green stuff is the travel planning funnel, which, if you notice, there are a couple of very bad things happening here. One is that all the money is made at the end of the transaction, end of the funnel, where all the transactions are. In the planning phase itself, you have search and reviews dominated by two giants, Google and TripAdvisor. And it's a really, really long funnel, 6 to 8 weeks long. So even if you acquire a customer, at the end of it, you have hundreds of ways of losing them along the way. So if travel planning is like Mount Doom, then itineraries, we think, are the one ring to rule them all. So what really happens is that we have found in our research that users come and they take inspiration from trips, from itineraries that are there on the system. They keep coming back to the platform because they want to collaborate and work with their friends on those itineraries. Then they book through those itineraries because they have the most context. And then they obviously take these itineraries with them on their smartphones when they're traveling, where our friends from like GetYourGuide can actually pitch to them. And finally, when they come back, they'd rather share an entire trip with their friends and not just some fragmented photos. So how are we solving this problem? So among other things, one of the most interesting things we have done is that we've written patent-pending algorithms that can suck in any kind of unstructured data, an article or a blog, like a story in the New York Times, and convert it into something that looks like this, a very immersive experience. And in the process, we've actually created the world's largest database of structured itineraries. This is what people do right now. They have ugly spreadsheets where they put in all their logistical details. Instead, we give them an interface like this, which is a smart planner where you can drag and drop things. It takes into account how far places are from each other. It takes into account what the opening, closing hours, and so on. And finally, instead of having a few hundred tabs to book everything from, you have a single page to book everything. So now let me talk a bit more about the company and myself. This is what the company is. My own background is I used to work at Google before this, serial entrepreneur, went to business school at Stanford, engineer by training, and so is my co-founder. And we have 8 kick-ass engineers sitting in Bangalore in India who have built a product that has already been nominated twice for Focusrite's most innovative products. And we have great investors, both in Silicon Valley, like Bloomberg Capital and 500 startups, but also in India, like Helion. And finally, we have a straightforward business model. We make money every time people book. We make money when there are platform kind of revenues, which is you can hire a local guide and so on. And finally, we make advertising revenues. So looking forward to your support. Thank you.
So how do you acquire your traffic?
How we acquire our traffic?
Yep.
So $1 billion question in travel. In our case, our history was that we used to be, until a year ago, we used to be a travel planning site where you could come in and ask any question. And we had built this massive platform of individuals who would actually research and plan the trip on your behalf. So in the process, we created an amazing amount of content, and we get tons of traffic through SEO right now. But the other thing that works really well in our case is that travel is inherently a very social activity. We don't believe that it's social to begin with, but once you have an itinerary, we have found that people tend to invite co-travelers and in turn invite other friends who know a lot about their trips. So the virality factor there is very high. And the last thing that we are hoping to figure out from here is partnerships. So the product has still been out for only 5 months now, but we've had interest from OTAs because they are at the bottom end of the funnel and they want an interesting travel planning solution at the top. And that might be something that we might look at.
So how many unique visitors do you have per month, and how many pages are they watching? What is, how often are they coming back?
Yeah, so we're still very small, as I said. So the old product had about 120,000 visitors per month. And we have, right now, about 15% of them actually using the new site and the new product. But we have very high conversion rates. The main thing that we actually look for is how many of them actually end up saving a plan and eventually going to the booking option. And that's, for us, is approximately 7 to 8% right now of all people who come to the new site.
7 to 8% who do what? Who create an itinerary or who book?
So about 10% actually save an itinerary. It's 10 to 12% save an itinerary. Often nearly half end up actually on the booking page.
Because historically, the issue with the affiliate-type models, if on a secondary activity is like 2% visit your site,
exactly,
create itinerary, and then like 10% book, you're at a 0.2% conversion rate to order.
Yeah,
the model just doesn't work.
No, I think in our case, I think it's early data right now. What we're finding is that maybe early adopters who are actually going through the experience much further, and we haven't. It's not like the transactions are closing right now. I mean, we have a very low conversion, like eventual completion rate. What we're finding is that there's still something missing in the product, and we think that might be the old concierge model that we used to have. Because in a way, what we're doing is very unnatural. We're trying to get you who have typically spent 6 weeks planning a trip to get to be comfortable with something that happens in 15 minutes. So we think there's still the next conversion cycle that requires to book.
I mean, a lot of people have tried this over the years, right? And Yahoo, I think, used to be quite big into it, and others. I mean, is it now things like the way you're creating the structured data, is that really a viable differentiator over time?
So I've actually looked at the Yahoo product pretty closely, and at some level, I think it was a little ahead of its time. I think one of the big things that was missing at the time when Yahoo went out was that they were looking at purely a UGC way of actually creating itineraries. What we have done, what we discovered when we were doing all this customer development, was that people actually go to the New York Times site right now, they read an article or a blog written by someone and copy it down on a spreadsheet. Or they go to a tour operator site, not with the intention of booking anything, but just to find out what do people do for 7 days in Turkey. So we have automated that entire process, and we pull in amazing amount of information from Foursquare, from Flickr, and so on, to give you this very immersive experience. So I think that's kind of the difference right now from a product standpoint.
Yeah, but the thing is, your past content that gives you some SEO, first of all, I don't think that will convert extremely well. I mean, it's not a source of new traffic. I mean, how are you going to, and as we discussed earlier, acquiring traffic in the travel category is extremely expensive, and it's going to be and it's really going to be hard to square the unit economics if on the back end, even if you end up with like a 0.5% conversion rate, which I think is on the really high end of what you can do, because it's like X% times X%.
Right, absolutely. So in fact, I used to be at the other end of the bargain when I used to work at Google and manage the relationship with TripAdvisor and Expedia and so on. And this is exactly right. So one of the ideas that we have, which is kind of playing out in its early days right now, is locals. So what really happens is that what we've really done is that we've built this platform for an individual sitting in Amsterdam to talk about their city, build itineraries, and in the process actually get paid every time that itinerary gets booked or when they're asked for advice. So what we have found in our early test right now, it's still very early to say, is that these guys are amongst our biggest proponents. They go out and spam their entire Facebook friends and tell them that next time when you're coming to Amsterdam, don't pester me and go to Mygola and actually use my trip and book through that and actually ask for my advice and get paid.
And all that's targeted more towards a very sophisticated traveler group looking for individual itineraries, or is this targeted towards the mass market just looking for something special to do all in one package?
Right, so we have all kinds of itineraries, but what we found is that we are definitely focused on the independent market, the independent traveler. But even in the independent traveler, we've taken a big fork in the road. So we have the technology to, for example, cater to the control freak, which is someone who actually wants the universe of all options and then wants to pull them together by themselves. But we're not going after them because they're very set ways on how they book. What we are really going after is people like us. I have a 5-year-old daughter. I used to be the control freak just a few years back, but now where I am at is that if you give me a great option, I can tell you whether it works for me or not. But I don't have the time or the patience to pull together something. And that's also a higher spending demographic. And in fact, that's the reason why, if you look at the interface, we've focused very strongly on tablets, because we think tablets are the right form factor for doing travel planning.
You've been around since 2009, or did you pivot to this new model more recently?
Yes, we pivoted to this new model about 5 months back.
Okay.
So we've been working on this for almost a year, but released the site about 5 months back.
Okay. Thank you.
Thanks.
Thank you.
Outfittery.
Outfittery presents The Box. A box that helps you to be what you want to be. You feel like a rock star? Rock on. You prefer chilling at the Côte d'Azur? S'il vous plaît. Want to play some polo? Why not? Or how about showing everybody who's the boss? Yes, sir. How to get the box. Step 1. Visit outfittery.de and choose your styles, sizes, and prizes. Step 2. Your personal stylist will call you to clear final questions. Step 3. Get your box. Outfittery. Unbox your new self.
Yeah, hello, I'm Anna. I'm the founder of Outfittery, and I'm very happy to be here today, surrounded by so many well-dressed men. But as you know, it's hard work to be dressed well, and it's definitely very time-consuming. That's why we created Outfittery, an online personal shopping service for men. And our mission really is to take the pain out of shopping. So how is it working? You get your personal stylist on the phone in a short phone conversation and instead of going to a crowded mall on a Saturday. This is Mia. She's one of our 50 stylists, and yes, she is real. So she will find out what you really want and need and will put together a beautiful box with outfits for you. You just choose what you love most. So who are we? We are a very strong and experienced team, combining experience from Rocket, Zalando, and Peek & Cloppenburg. So is it working? Yes, it is. With only 12 months, we attracted 50,000 customers who are keeping an average basket value of 250 euro. So, and even more amazing, 60% of our customers already ordered a second or a third box. So, with these numbers in the background, we are really confident that we are the one who are cracking this huge menswear market of 100 billion euro in Europe alone. With our concept, we are perfectly placed to establish Outfittery as a gateway to online fashion for all those 95% of guys out there who are still shopping offline. So who is our target group? We have a very attractive target group, men, and our customers, for example, is this trendy game changer, or this smart-looking visionary, or this handsome Austrian guy. So why should you vote for us today? We are a very visual concept that works great on TV. Our strong core market is the German-speaking countries. And for us, building a great brand in menswear is really the next step. So that's why a TV budget would come really handy. Let's make German-speaking man the best-dressed man in the world. And to start with, vote for us today and get a 50 euro voucher code of Outfittery. Thank you.
Is there any difference with Trunk Club, or is it?
Yeah, it's similar to Trunk Club, but we are much more scalable processes in the background.
What have been your return rates so far? So of your 50,000 customers, how many returns have you had, and what's your policies around that?
So our return rate per
Right.
box, you mean?
Yes.
Okay, so our return rate is around 70%, and it goes down over the customer lifetime value, since we got to know the customer much better with every box he gets.
And so, I mean, first of all, I hope you're going to do something for the French guys as well at some point.
They don't need it.
So we could be well dressed as well. But overall, so how are you dealing with the fit? Because there is one thing which is the fashion, and there is one thing which is, well, you know, guess what? This jacket is great, but when I wear it, it just doesn't fit. So how do you, how do you best fit the items to make sure that it's not just a question of choice, which is already, you know, something to work on, but also a matter of fit?
Yeah, so we ask every customer for its sizes, and we know every item that we ship extremely well. So every item has been fitted on a fitting model, and we exactly know which shirt, for example, has long arms. And so the stylist can really bring this knowledge together. So our sizing issues in returns is much lower than if the customer would order this himself and do not know that, for example, brand XY has short arms.
But how many measurements are you taking? I mean, is it something that is cumbersome because you need, you know, 20 measurements, or is it something where you just need the average size and height, which takes, you know, 2 minutes?
So what we need from the customer is just his height, his weight, and his sizes, and his usual problems when going shopping. For example, like, yeah, short legs and trousers. And then that's all we need to get the perfect fit for the customer.
So did you say the lifetime value of a customer is 250 euro today? It sounds quite low, given what's in the box.
No, so The 250 euro is not the lifetime value, it's really the basket value, that's the average kept basket value per customer per box after returns.
And the gross margin on the products?
It's around 50%.
50.
Yeah, 50.
How do you, similar question to the lens company before, how do you compete with Mr. Porters and these other players, you know, simply adding this as a new vertical, as a new service, given that they've already gone through the customer acquisition process, et cetera, and can leverage that?
So what we see is that there's no one really out there who cracked the menswear market online. For example, Mr. Porter is a very upscale model and not suited for everybody. So this is really where we position ourselves and where we see ourselves bringing all those people who are now still shopping offline, online through this concept.
So if your former boss, you know, if he saw this flies with all the TV advertising you might get, how do you prevent Zalando from adding this as a service? So hiring a few good personal shoppers and just blowing you out of the water.
So for us, it's very important to make it as easy for the customer as possible, but the processes and the background are very well thought through. And we needed 1.5 years now to build up these processes. So everyone who would start now needs 1.5 years as well, and then we're way above the hill.
How many stylists have you got? Do you train them up? Do you give them great tools? Are they? What's the difference between your best stylist and your worst stylist?
So within 2 weeks, we have a new stylist at the same level like the other stylists, and that we do by providing them with a very good tool over which they can share the knowledge and see the items and see all the information attached to the items and the users.
The stylists are third parties, or they're employee companies?
So they are full employed with our company.
They're full employees,
yes.
okay.
Yes, and that we do this because we really want to ensure a very high quality of consultation for the customer.
And it's not a subscription model?
No, it's not a subscription model, but as so many people come back, so the loyalty of our customers is extremely high, so from the numbers point, it's almost a subscription.
I mean, in a way, you have a differentiated pitch, right? We're going to have the stylist, but the reality is ultimately you're targeting men who want to buy stuff online. There's a whole bunch of people pitching these guys. How are you finding the customer acquisition strategy to be working for you?
Yeah, so we have 50% doing over performance marketing. It's a display concept, so we're doing it on display and on Facebook, and we have 30% viral. And that's a fact that we totally underestimated in the beginning, that this concept really can go viral, and our customer and men are really talking about that they have their own stylist now. But yeah, of course, we love this fact.
Thank you.
Thanks.
And Tado.
In 2011, we came together as a team to reduce energy consumption in private homes. The goal was to develop an assistant that controls everyone's heating in a much smarter way.
Tado is the first heating app with geolocation built in. What does that mean? Well, it automatically turns down the heat when the last person is left home. And before you come back, without you having to push a single button, Tado has already warmed up the home. Overall, that saves 27% on heating costs and CO2.
A few years back, we were still soldering prototypes at home, and by today we have thousands of happy customers. And now is the time to spread the word about Tado, the heating app. Thank you. Every single one of you takes everyday action not to waste resources. Let me walk you through your day so far. After brushing your teeth in the morning, you stop the water tap, no reason to leave it running. When you left the house, you switched off the light, because why should you waste the money? But what about your heating? Your heating consumes 2/3 of your total energy bill. And this morning, you probably left it running. You left it running, you leave it running no matter if you go to work or if you're away for a weekend trip. And this is exactly the reason why we have developed Tado. Tado works like a digital assistant for you around the clock, 24/7, to take care that it's always comfortable at home when you're there, but you never waste on energy. The product consists of 2 components. It's the connector kit, which brings any heating to the internet, and the app on your smartphone. The smartphone app actually uses the location signals of your phone, similar to a navigation system in the car. And when the last person leaves the house, the temperature automatically goes down to save on energy. And before the first person comes back, the temperature goes up so it's warm when you're there. Tado also integrates web-based weather forecasts for your region. As an example, the higher the solar radiation, the less heat is demanded by the heating system. So overall, our goal is to bring anybody's heating system into the 21st century. And this is, by the way, the real benefit of Internet of Things.
And you know what? We're actually on a really great track. So all of our active customers today, they already save as much as 9 average onshore wind turbines can save. And if we continue on that track, by the time we reach 5 million active customers, we can actually shut down half of Germany's nuclear plants. So the message we want to get out to you guys today is that we're ready. We have a great, awesome team in Munich that has been shipping for over a year now. And we actually launched on the 14th of November last year, so it's 365 days. Since then, we've collected 10,000 orders that are worth 3 to 5 million euros in customer lifetime value, and we've only spent 140K euros in marketing so far. We've received funding from 2 great VCs out of Europe, Target Partners and Shortcut Ventures. And so, why TV? We think it's the ideal channel for us to scale now, because we've built a very simple product that addresses a very obvious need, right? It's very, very simple to use, and it addresses everyone who lives in a heated home, basically, and this is happening in a time where the energy prices are on a continuous rise. So we've made sure that production can be scaled to 1 million units per year, and so all we need to do now is spread the word about the heating app and continue to build a strong B2C brand, and to be honest, it would be a blast to do together with 7 Ventures. Thank you very much.
I actually wondered if is this working better in rather static scenarios? So I'm leaving the house in the morning, come back in the evening, and it's basically a nice remote for my heating? Or can it really handle high variability? So young families going in and out, what's the main value proposition to which segment?
I mean, the great thing is that it's very dynamic, so it detects automatically when the last person left the house. So it works in either case, even if you have a regular schedule or if it's very dynamic. It adjusts according to your needs.
But probably different, depending on the heating system, some have very long latency. It cannot unfold its full potential, right?
I mean, the good thing about our algorithms in the back is that they're self-learning, so they're adapting, so that they adapt to your building characteristics, your heating system. So basically, a building model specifically for every user is being created automatically to react on those situations.
So how much does average household save on its energy bill, and how much is that in euros?
Well, so Germany, the average customer pays about 980 euros a year for heating, and with Tado, you have the potential to save 27%. So that adds up to roughly 300 euros a year.
And the devices cost how much, or the average home installation is how much?
Well, you can. There are 2 options. You can either rent or buy the connector kit. If you rent, it's 825 euros a month. If you buy, it's 299 one-off, including a lifetime service. So when you ask for amortization, when you buy, basically it's amortized in one heating period. If you rent, it's instantly amortized because you start saving from day one.
Is what you do going to be hard enough that the big energy providers don't bundle it in with their own products?
Yeah, it's a really great, I mean, on one hand, it's against the traditional business model of a utility. They want to sell gas, but they realize that the margins are really low and they can yeah, with extra services, they actually can improve their margins a lot. And it fits quite well, yes. So there's one utility where we signed a rollout contract. And the good thing, you see your heating costs in real time on your smartphone. So there's not this type of bill shock at the end of the year where you're like, oh, this utility company, I'm really angry at them. But you can control how much you spend on energy, and you see it up front. So that's an extra benefit for them.
But is it hard enough that someone else won't come in and white label it for them, or they'll do it themselves?
I mean, we're the only company in Europe which is multi-vendor compatible for the different heating systems. So, and it took us 3 years to develop all the different interfaces. So it's digital interfaces to connect to the heating systems, and this is quite a big thing.
What percentage of houses of a heating system compatible with your system? Because I assume if it's only a manual radiator, it doesn't work.
Yeah. So for Germany, we're compatible with 55% of all households with the current product, and we have a new connector kit which is being tested in the field right now, which will start selling in beginning of next year. And then we're more or less 100% compatible in Germany. And for the other European countries, it's actually even better because the systems are easier to connect. For example, for the UK, we just started shipping in the UK a few months ago.
Two questions. What's the split subscription versus direct, $299 sale? And are the end consumers the ultimate buyers with us, or do you think someone else will buy for them as part of another package? And if it's the end consumer directly, how do you reach them?
Well,
to date,
our strategy is that we go directly to B2C customers, absolutely.
Yeah.
And what we do is right now, the majority of customers comes from online channels, so we convert them in our own online shop. But on the same side, we're also building up a decentralized network with chimney sweeps, for example. We also have online and offline retail partners. So this is on the direct side, which we're doing right now. On another page, we're building up project business in the utility space, as Chris mentioned before.
And the split subscription versus one-time sale?
The split is kind of half-half right now. It kind of depends on the country. So in Germany, it's a little bit different than in the UK. But it's overall, it's half-half.
Can you talk about the economics of this one utility relationship you have? And is there a potential to roll that out to the other ones? So in other words, is there a value proposition where you can save yourself the customer acquisition costs of B2C and go directly through them and offer them some kind of bundling proposition which makes you money, makes them money? Might be more scalable.
Yeah. So with them we defined a very good model which we could get to fly very fast. So basically we integrated our online shop as a white label into their webpage, and they bundle it with their gas tariff, and they market it through several multiple channels as a standalone on one hand, but also as a bundle with their gas tariff. So it's embedded in their website, but it actually goes through all our operations and our online shop. And also the app, of course, has some specifics to their brand, so they are recognized.
And the economics for you, do that deteriorate in this customer segment relative to B2C? Or is it still...
Exactly. So as a first, so we're starting until we reached 5,000 customers with them. That it's basically, we pay them a small fee for each customer they get. And then pretty much it's basically our customer and through our processes. So that's the process how we start this whole thing. And then we have defined several steps on what we are going to do after that. But we wanted to kick this off very quickly. And as you know, for a large corporation which does several billion in revenues, they have processes with SAP and so on. If you want to integrate a hardware product into a utility company, that takes a lot of time. That's why we have chosen the quick approach.
Okay.
There is a high-profile company in the US called Nest. How do you compare to them?
Yeah, very good question. And so we started developing the product. Actually, we had product a lot before Nest actually existed. But how we compare, is that we are actually the digital assistant. Yeah? On one hand, the user interface is on the smartphone, and because we think that the smartphone is the central device of people's lives. And they have taken a thermostat and they made it really nice looking and put it on the wall, and they are also doing it really great from a marketing and sales perspective. The good thing is about Tado, if I have the central device as a smartphone, we use the smartphone as a sensor. So when you leave the house, it automatically sends a signal to the heating system before you come back, it's warm and comfortable and so on. So this is really our central thing. And on top, which is our unit economics are much, much better. So our white box here costs quite not so much in production, but if you have the Nest thermostat, the bill of material is quite high.
Just to add to that, we feel that we want to play the game in the Internet of Things and cloud space.
Yeah.
So the connector kit is very lean. It's not there. It's not supposed to be there because, as Chris mentioned, the central remote control in people's lives will be the smartphone. So why put a Retina screen on the wall if I have one right here?
Exactly. When I sit on the couch, I want to have it a little bit warmer. I take out my phone. I don't have to go to the first floor to change the wheel.
I mean, Germans are so conservative, yeah? So how do you overcome, we talked about trust earlier and some of the other models, the concern that they have, okay, I leave the house, I have this app, but, you know, it turns the house into a freezer. Yeah? I mean, that has the advantage of the bundling with the utility because they trust it more automatically, but how do you overcome that issue?
Yeah. I mean, it's a good thing, a good question. I mean, on one hand, of course, we have to build up a strong brand and a reputation with large partners, but also by doing TV advertisement, for example, and then our customers have to talk good about us to overcome this thing. And also, of course, whenever you check the app, you always know what's going on, so you're never left alone. You always have it under control.
Okay. Thank you.
Thank you.
Thanks.
Well, and while the team in the background is calculating the results from the jury, and this jury is still discussing, we already have a first winner, ladies and gentlemen. But first of all, I would like to say, give the audience, give the startups a big clap. It was a great show that they did here on stage. And I would say also for the audience, they did a great show. Good grill. Thank you very much. Well, and now I need the clicker. Somebody has the clicker? Super. All right, ladies and gentlemen, I told you that we've got an audience prize, and this audience prize is worth 40,000 euro. It's a consulting package from 3 companies, and we just stopped the voting. So we've got in total, hope it works. Yeah. They put in the number on the fly in the background. We've got now 4,116 votes. And what's the prize? So the sponsors of the prize are Piabo, Enable to Grow, and Booming. And I would like to ask Stephanie on stage. She is founder and CEO of Enable to Grow, and she will tell you about what's the prize is all about and what the winner of the prize can expect. Hi there.
Hi.
Hi.
Thank you very much. We are very happy to be once again here. As mentioned before, we also supported and sponsored our prize last year and worked with Buzu, the outcome you saw. Today we are very happy to be here and of course very excited who it will be we will support. This is the prize, a toolbox sponsored by the 3 companies. And what is it about? Well, we brought little gags. First of all, a racket and a ball, because we consider ourselves as sparring partners and able to grow as the growth consultancy to really be your sparring partner and helping you how to accelerate and how to manage your growth in digital business. And then once this is set and you have a clear positioning and you know where to go, now you need to get somebody hear you. You need to have the right PR agency to help you get out loud and be heard. And of course, you also need to be seen. And for that, Booming will help with special glasses here, so that also your organic search will work well. This is the prize, and we're excited
so
to see.
who is the winner? And ladies and gentlemen, the winner of the audience prize is iGuys24. Thank you very much. Congratulations, Yasha. Thanks. Do you want to don't you want to give the prize over to the winner?
Of course.
And that's a mic. So now we're waiting for the results of the jury. I'm hoping they're fast. Perhaps somebody from the guys in the background can give me a sign whether we have a decision already. I could tell you now stories or jokes, but I'm very bad in jokes, so I try to avoid that. Oh, my beard, yeah. I thought that there are so many men here. I think 95% men in the room, and you know all the Movember movement. And yeah, that's actually my statement here for the Movember, for everybody who is I want everybody to donate in this Movember charity, and also, yeah, check your health. That's the Movember movement for men's health. That's actually the background. So obviously, we're done, and I can switch to the first slide. So we've got a price of 7 million euro TV media, nothing in return. So we give it away. The startups can use it on all of our channels in Germany, as Buzu has done last year. He told you about he almost tripled branding in Germany. He increased sales, he increased the user base. And now we've got the winners here on stage. 7 Ventures Pitch Day 2013. And the winners are 1 million euro, and the third prize goes to Azimo. Mike, it's a pleasure. Come in the middle. Congratulations.
Thank you.
Oh, it's a pleasure.
Cheers, man.
You
I
too.
appreciate it.
All right. Now we've got a second winner, and the second winner is the one who gets 2 million euro on all our channels on Pro7 Sat.1. And the second prize goes to Tado.
Thank you.
Alles Gute. Gratuliere.
Danke. Yes.
Super. And ladies and gentlemen, before I tell you the winner of this year's 7 Ventures Pitch Day, I would like to ask Philipp Freiser on the stage, who will hand over the prize. Philipp, you know already who the winner is, don't you?
I do, but I won't tell you.
Okay. Then let's see who is the winner of the 7 Ventures Pitch Day 2013. 4 million euros go to GetYourGuide! Gratuliere, Johannes. Gratuliere. Super. Großartig. Super Show.
Danke vielmals,
Gratuliere.
der Hammer.
Perfekt. Bleibst du noch kurz da?
Soll ich schon bleiben?
Ja. So, this is actually the end of this year's 7 Ventures Pitch Day. Philipp Preise, thank you very much as representative of the jury. Thank you for being here. Thank you for everybody of the jury who took their time. Also, thank you to 7 Ventures, to the whole team that actually supported us for the last couple of months. There were about more than 60 people supporting. Thank you to everybody. Thank you for your energy, for your passion, for supporting, even though when the time was not the thing that you always had. Thank you for that. Also, thank you to 7 Ventures who really made that happen, and thank you to let me do that, and let me do that very unbiased, independently, because that's the only way where we could present you the best startups here on stage. Thank you very much. Have a great evening, and see you next year.